to Friday's 15. Sorry, Marlon, did I go a little bit quicker than the recording? Welcome, traders. Live trading profits, 15-minute show Friday. Trust you all well. Let's have a quick look at what the market is doing. Well, today, Friday, of course, first day of the month. Always interesting when the first day of the month is on a Friday, which means last day was Thursday, of course. So yesterday we had all the monthly bulls and bears coming into the market, trying to give us, trying to get the market to get to close where they wanted for the month. Today is a Friday, so still expect weekly volumes, but you don't have the monthly traders. Just closed the month. It was a good month. What's a good month, George, is a question you may ask. Well, on one of my accounts, the PAM, 5% return for the month, which is all right. No bank is going to give you 5% a month because that's 80% in the year, right? And then my other investors account, 10%, which is 214% if you want to annualize that. So why the difference? Exactly the same trades. The only difference is the spreads between the brokers. So I just got to be a little bit more careful when trading with the other broker, because their spreads are much wider. So, where I put my stops, not the same as the one particular account. But anyway, 5 and 10% a month, super happy with it. For November, let's see what December brings us. December, I'm going up to the 22nd of December. So essentially it is, just 1 week short. But it's going to be a good month, I think, because what happened in November was broken out of the tight trading ranges that all the markets were in with the last few days. So we should have good volumes going through. So anyway, I have taken a few trades this morning and net positive so far. So happiness. Let's have a look at DAX, German 30. First candle, big bull candle. And I thought, well, if the bulls are strong, they might want to accelerate above that and give us a pullback, but they failed immediately. Now, when I get a failure of the first candle, I don't jump in and sell, unless this had become a big bull candle and failed and became a bear candle. Then it could be a high test candle, higher chance that might go a little bit further. So wait, got a lower low double bottom here. Now I'm just looking at when the market opened. I'm not looking at the Asian market. So when an exchange opens, of course, we keep in mind previous levels that took place. In this case, the Asian market, just like when the New York Stock Exchange opens later on, although I'm trading it throughout the day, I'm very cognizant of that first candle or the opening of the exchange itself. So that, you look at what traders in that market are looking at. So I had a lower double bottom. This low, slightly lower than the first candle. Wanted to find ways to get in the market, got a higher low double bottom here. Bear candle, so I don't like buying above a bear candle. Waited for the bull candle, and just bought live in the market and got triggered there. So that's the actual lines from MT4. That's the actual trade that was taken. Then when we got up here, which was near the measured move of the first candle, that's something that I'm always marking. So you can see I get quite busy. I write on my charts, just makes it easier when I then pull down my PowerPoint slides later on. So I'm writing what I'm seeing as the market is going on. So when we got here to the in the range of the measured move, I thought, oh, why are we pausing right there? Why aren't the bulls, accelerating up? Then we had another bear candle. So I wasn't quite happy with that. So I got out of that. And we go to the measured move, failed, came back. So even if I tatted my stop, would have been taken out and even there. So now what we have on this market, double top, MTRA for me means measured trend, measured trend reversal. Alert doesn't mean the market is going to collapse, but it's just an alert. Like here, after I had this failed breakout, this inside pattern, BOM breakout mode, and the inside candle, thought, oh, well, market might just sell off. Couple of candles, double top. And in order for me to short, I'm happy with what the bears have done here. A couple of candles, 3 closes beneath the EMA. But I want to see a little bit more bear strength, maybe in a lower high, and I can look to short. This is leg 1, leg 2. So the bears that created this would have wanted to get to the leg two, but they've already failed. The leg two, they've come immediately after this. So chances are, even if they get there, it will be a completely different structure. So happy with the DAX trade for this morning. UK 100 FTSE 100. Okay, took another trade here, not here as well. Took a trade here and exited. So first candle, bull candle. Then bulls came with this huge candle, really a surprise breakout, but fantastic, breaking out above my light green line, which is the high of yesterday. And then we had follow through. So good breakout follow through. And I thought, well, this is good for the bulls. Or, I wait for the pullback. So the pullback, hoping that it comes and bounces off the EMA. And then I would have bought above. But to go to the EMA, the bears had a close beneath it and the second close. So that was a weak reversal for the bulls. Although we had that candle there, bull candle, pretty weak reversal, because they should not have allowed the bears to close beneath the EMA. But then when I saw the low test again, bear candle, I don't want to buy above the bear candle, but when I saw it breaking above the bull candle, bought the market, but already I was expecting failure because of this weakness here that we had. So when we got here, got the double top, and I'm saying, man, if the bulls are nice and strong, they're going to close above the EMA and follow through. I mean, close above this previous high and follow through, like happened with the DAX. We just blasted above that. But unfortunately, because I didn't make a ton of money. They didn't go much higher. We had that reversal. So I closed my trade because I was expecting the failure. There's no point holding on to it or trying to tell the story. So this line here is where I closed my trade. And then the bears carried on, and I was looking for a decent enough lower high. Wanted to see them close beneath the EMA, give me a lower high. They still give us a lower high, but not where I wanted. So their move was this first leg, pull back, second leg. So this bull reversal was the end of the bear move without giving us an opportunity to jump in. There's no ways I would jump in that, having seen the measured move, having seen these lows, because the risk is too high. If I had done that, I would not have been fast enough to bring my stop to break even. So, would have been stopped out. As it is now, I just need to get a little bit more information. Do I buy or do I sell? Well, if I'm going to sell, now I need to see a double top or maybe even, a bit of a wedge. Let them go up like that. This is the bulls. Let the bears repulse them. Now we'll have a second top. Let them try again for the third time. And if I get something like that, I have a wedge top here, 1, 2, 3. I have a larger wedge top, 1, 2, 3. Then I can just hit sell and hopefully make some more money before the US market opens. And the news, there's news in 3 hours. So Canadian news, employment change, unemployment rate, that can move that market. And now and half later is US market. So for me, my time now is on 12:38 in the afternoon. So I got time. Let's see if this is a question. Where do you place your stop loss? Good questions. I have to always remember. I keep forgetting. So because I see a reversal pattern here, I just use a measured move. Boom. So my stop is here. That's a technical place for the stop. That's the place for the stop. But then you just go a little bit lower because you've got a nearer level there. Had we come back any little lower, I'll just probably use the measured move stop for the first candle, which I think I had already marked here. So if we had come back and given us a double bottom anyway in here, that first candle measured move is where I would have put my stop. But we turned a little bit earlier, and that's fine. On DAX, I think my stop was just above. So there's the same thing. There's a little bit of a reversal pattern there. You could even just use one bull candle. And below the lower low double bottom, below the first candle. So I think I had my initial stop just above the high of yesterday. So if we got, let's say, a good enough setup here, if we got a good enough setup, I'm looking to the left and say, well, there's a bit of a reversal pattern, this trading range. For the very first trade, whatever would turn, I'll put a measured move stop, accelerate down, then we can put other stops in the market. Let's show you the CAD, because I spoke about Canadian news. CAD was interesting. So this bear breakout, well, the first candle is a tail on the bottom, so a bit of a problem for the bears. Follow through. So after the first three candles, we had a decent enough candle after three candles, like a 15-minute candle. Then we had a tight trading range, pull back to the EMA. I wasn't happy with this because decent enough pullback when I see it come back and test the EMAs. But I saw this high test, decent enough candle. So I went in and I saw that. And when I saw that at that time, that was a pattern, but just above that, I still have it marked. But just above that was the open of the day. So there was a stop for the day. And the anticipation was that the bears would carry on. As soon as it failed, I pulled my stop down, and it was a couple of pips above this candle. So one of the things that I really like to do is as soon as something fails, I just want to get out. I don't want to sit there and hope it turns. It might just become one bull candle and stop me out earlier. That's fine. So I got stopped out of that because the bulls looked like they're pretty strong. So I got stopped out while this candle was still acting as I pulled it down. Immediately after, the bears came back with a decent enough candle. I thought, well, okay, so maybe that's a failed breakout above the trade range. Happy to sell that. So I just sold that. And as soon as we got to near the measured move of the first candle, measured move of the breakout, because that's a breakout that we're breaking out of. So that's European open. That's the measured move. And I thought, okay, enough, get out. Now, interesting enough, wedge top, wedge bottom, breakout, pullback, high one, little bit deep for the bears. So, I'll probably need to wait a little bit more to jump into this trade. I've been marking this, looking for one of my patterns is a major trend reversal. She's got 5 steps. One, break above the trend. Then the bears resume. So I'd have loved to see the bears coming in to test that low, which they didn't, which means those are pretty strong, but still, that's the 3rd step. Then I want to see if anywhere in here we fail, give a 2-bar reversal, do whatever. That's probably going a little bit higher. I would have wanted a little bit lower. So the major trend reversal, I would have wanted something within there, the trend to resume again. And then if we came down here again, at step number 5, and the bulls resumed, that's what I'll be buying. So I'll be buying what's essentially a wedge bottom, 1, 2, 3, but it's 5 steps to it. But this is different. So this is good for the bulls. Now, here's the thing. If for any reason, I thought, let me buy this, I want to just wait and see if it moves above this candle. If I was going to do that at all, which is why I wouldn't think of the trade, the pattern I'm trading out of is there. So your stop has to be down here. You don't just put your stop anywhere tight because the market can just bounce you off. Okay, quickly, got a couple of minutes. S&P 500. Big candle at the open, weak breakout above first candle, so it kind of just went sideways. Bull acceleration, that is a type of a breakout pullback. I won the inside candle. Not very good for the bears. The bears want to fail the market, so you can assume the market will still accelerate up. So I kind of thought, well, I didn't take the trade here because I was managing many things. But at this point, if the bulls are strong and they close above this candle, I'm just going to buy at the market and hope to get acceleration. But if it fails, I am out. Bought it, got a couple of dodges, and then I exited. So I got a small loss on that. And what's taking place now, they've reached that leg 1, leg 2. Problem with this particular trade, well, I didn't take a trade, but the problem with it is that I would have preferred after this breakout to see just a little bit more strength by the bears. Doesn't have to go that far. Give us a decent enough reversal, But instead, we got a tight trading range, pull back to the EMA, this zone here. So if you ever look at that, what we have is a breakout beneath that trading range. And the market, it's above the leg 1, leg 2. But look at the bears, they're pretty strong. So what I'm going to be doing with S&P 500, I'm going to wait for a pullback, hopefully to test the breakout beneath the tight trading range. And if I get any decent enough setup, then I'm going to take it. So I'm going to wait a little bit more for that. So it's been a pretty good morning so far. Happy with it on the first day of the month. It's good to be up. So fantastic. Look at the CAD, bit of weakness there, but it's no longer my major trend reversal pattern to be something completely different. I've spoken about that. UK 100. I'm going to wait a little bit to see if we get a double top or a wedge top or something. I mean, Friday, you've always got to be careful because of the weekly traders. Now, I don't spend too much time going up to look at the weeklies and the monthlies, etc. I've got all my key levels marked up, key levels on the month. I'm just going to show you one. I hope my charts are not messed up with all the writing on it. Bit of a mess, but don't worry about it. On the UK 100, we got this wedge here with a big bear breakout. First attempt to make it fail, second, third. So that wedge top and that high of November is a key level that I'm going to watch. If we get up there, I expect the bears to come back in again. Thank you, traders. Let me see if there are any questions. No, there don't seem to be any questions. So really appreciate everyone's time and thank you for turning up. I know for guys on the Asian side of the continent, it's into the evening for you. So really appreciate it. Take care, guys, and we shall see you. Thanks, Lex. Thanks, Swift. Thanks for all the questions, guys. Danny, appreciate it, and we shall catch up again. Appreciate it. Cheers. Bye-bye.